seeking to solve the current dollar crisis, the world's major money markets closed today, and because of this, the American tourist felt the pinch. In many foreign cities, banks and hotels were reluctant to take the American dollar, and those that did were often operating on lower exchange rates. One disgruntled American tourist in Tokyo said he couldn't buy any presents or souvenirs and was going home. He said, quote, "I wanted to have a nice time in Tokyo, but without yen, I can't play." The men who shaped the administration's economic policy avoided specific discussion of the dollar's problems today as they testified before a House and Senate committee, and George Herman reports.
Repeatedly, the members of the committee tried to get the president's advisors to talk about the dollar drain and the world currency crisis, all without success. Said Chairman Stein of the Economic Advisers, "This happens to be the world's worst day for us to talk about it. We can't say a thing." Democrat Henry Royce of Wisconsin accepted the need for secrecy, but warned of the need for cooperation with Congress. He told Stein, "If you're thinking of asking us to approve another Smithsonian-Agreement establishing new fixed rates of exchange, well, forget it."
If I read the feelings of my colleagues correctly, we, having witnessed these less than successful operations, are of the view that the parity of the dollar should be fixed, fundamentally at least, by market forces rather than by the fiat of finance ministers and central bankers. We don't think they've done a good job at it. We think it's hurt the United States. And I would adjure you to bear that in mind during whatever it is that's going on that you can't tell us about.
Later, Royce told CBS News that he and other monetary experts in Congress think another Smithsonian-type agreement would be a disaster, think the dollar must be allowed to float for a while to find its own level. But the belief is growing here that Undersecretary Paul Volcker is now actually in the process of negotiating another such agreement with new fixed rates of dollar against mark and yen. The expectation among Royce and others here is that the dollar will have to be devalued a trifle, even if the mark and the yen are revalued upwards by West Germany and Japan. It takes congressional approval to devalue the dollar absolutely against gold, but as we found out 2 years ago, even an announcement that the president asks Congress to do such a thing brings an immediate de facto devaluation, no matter how reluctant Congress may be to do so. George Herman, CBS News, Washington.
European government exchange markets were closed today, but in unofficial trading, the dollar continued to plunge. In hopes of halting the new money crisis, the 9 common market countries plan to meet this Sunday in Brussels. In view of President Nixon's assurances that the dollar will not be further devalued, the European statesmen may decide to float upward to their own currencies, and that would have the same effect. For a look at the situation in Europe today, we have reports from John Lawrence and John Sheehan.
The government banks of Western Europe may have been closed, but the commercial banks, like Midlands of London, were busily buying and selling foreign currencies today. The dollar continued to drop. London bankers blamed the new crisis on the old problems, the huge surplus of billions of dollars surging around Europe, panic selling by speculators, big institutions, and Middle East oil millionaires, and a growing lack of confidence in paper currencies, not just the dollar. Bankers are beginning to express deep concern over the consequences should the present trend continue. Guy Field is the director of one of London's biggest merchant banking houses.
For me, the dangers are that the whole system will break down, which I think can only lead us into recession or depression. In the fact that business has lost complete confidence in money, there will be a lack of investment, and there will be a lack of ability to trade, and eventually you can lead yourself very quickly into a recession, into a depression.
A depression on what scale?
On a very severe scale, particularly in Europe.
As bad as the 30s?
Yeah, well, yes. I mean, I can't remember if that is, but I would think it can be as bad as that is, because the build-up to the crisis is much bigger than the build-up to the crisis in the 30s.
For the second time in less than a month, the finance ministers of Western Europe will find themselves hard at work again this weekend. The present system of foreign exchange dealings is in serious trouble, and last month's devaluation of the dollar was not enough to correct it. John Lawrence, CBS News, London.
On West Germany's small free market, the dollar dropped more than 6% since yesterday. British Prime Minister Edward Heath, in crisis meetings here in Bonn with Chancellor Willy Brandt, refused to join a devaluation of the dollar by raising the value of the money in all common market countries. If the others don't agree, West Germany can be forced to raise the Deutsche Mark alone, thus hurting German exports. What did come out of 2 days of talks between Brandt and Heath is that heads of government are baffled by the renewed inflow of billions of dollars by speculators betting that the dollar will go down again and the Deutsche Mark will go up.
As far as the present sudden crisis is concerned, I think it's very difficult to find any rational explanation.
But a real insider, former German economics minister Karl Schiller, told us the speculators beating the dollar down aren't irrational. He says they're some of the world's biggest companies, like Ford, General Motors, and IBM, among others, dumping dollars for Deutsche Marks.
I must say that managers, the financial directors of these multinational companies are very clever and very rational people. They try to put their liquid assets into that countries where the central bank is ready or obliged to buy the dollar for a fixed price, eventually for a high price, which will never be reached again.
On government orders, West Germany's official money markets will remain closed until next Wednesday. The experts agree that when they open, the dollar will have dropped again. John Sheehan, CBS News, Bonn.
General Motors, Ford, and IBM have denied that they are engaging in speculation with the U.S. dollar.
The Senate today approved legislation officially devaluing the dollar. Among a variety of riders attached to the bill is one that would let Americans own, buy, and sell raw gold, which has been prohibited by law since 1934. The increased price of gold in world markets has already had some impact in this country. ABC's Dick Shoemaker reports from California.
We're going inside the 100-year-old Brown Bear mine in Northern California. The experts say it's profitable now to work these old mines because of the rise in the price of gold. The mineral rights to this one purchased by a young speculator, David Horay.
Here we have one of the major veins of the Brown Bear mine. This is the last chance vein. Here it runs 2 foot wide in quartz and rich sulfides, and the production from the stopes up above this Watt tunnel level has been over $300,000.
One problem in reopening the mine was water. The tunnel flooded by more than 1 million gallons during the rainy season. They also had to lay miles of new track and move old track over to accommodate new equipment. There were also cave-ins that had to be cleaned up. Yet despite the problems, the experts say at today's prices, there's a lot of gold still left. But not all of this precious metal is being mined by new equipment and young speculators. This fellow is Fred Eby, known as the Squire of Squirrel Creek. He's 98 years old and still prospecting. Just one of the estimated 1,400 sourdoughs mining in Northern California. They're all hoping the gold rush means they finally made it. Eby and his partner, Mrs. Ebner, say their claims are really rich.
They are really rich. For open pit, I don't know where you'll ever find any richer than they are. Because you can take the whole hill.
You aren't a drinking man.
No, that's out. To be a prospector, I had to learn the most of it myself. And now then, if I would have taken my grandfather's advice when I was a young fella, I could have saved about 20 years of my life.
What's the secret in panning for gold?
It'd take a little while to learn it yourself, but if you watch someone else, you would learn it in the 1 day, or maybe less.
Well, it really isn't as easy as it looks. But if you ask Fred Eby, and he'll certainly tell you, he's been prospecting since 1906, and he hasn't struck it rich yet, except perhaps in his own experiences. This is Dick Shoemaker, ABC News, with the Squire of Squirrel Creek